Welcome to this AGM portfolio update for the Amati AIM VCT. My name is David Stevenson. I'm one of the investment team at Amati, and in the course of this presentation I'm going to cover firstly some general points on the makeup of the current portfolio, then the recent performance and the portfolio holdings that have contributed towards that, and finally look at recent deal flow activity. So first of all, I'll begin with portfolio composition. On the left-hand side of this chart, you'll see the weightings within market cap ranges across the portfolio. And what you'll see from that is that we have a broad spread of size of companies, from micro cap at the lower end of AIM up to the largest companies at the top. Whilst about 25% of the portfolio are in companies with a market cap below 50 million, which we would term micro cap and is the entry point for our deal flow when we invest in companies initially. Over a third of the portfolio is greater than 500 million market cap, and at the upper end that includes the largest company within the portfolio, GB Group, which has a market cap of 1.3 billion. On the right hand side of this chart, the slide rather, we also show the weightings of our top 10 holdings, then the next 10 holdings in size, and then the remainder of the portfolio. Following our strategy of running our winners in recent years, our top 10 holdings now comprise well over 50% of the portfolio value. And this covers a range of mature and established companies which have grown steadily since we initially invested. I'll now run through these top 10 companies, but I'm sure a number of the names are already familiar to you. On the next slide, we have the biggest 5 holdings. Starting at the top, we have Frontier Development, which, following a very strong run in the shares, as you'll see from the right-hand column, which is the share price movement since the financial year end of the VCT, 31st of January 2020. Frontier has moved right to the top of the portfolio. I'm going to cover off some of the news flow that's generated that performance in a later slide. Second largest holding, which previously has been our largest holding, is the VCT's investment in our Smaller Companies Fund, the TB Amati UK Smaller Companies Fund. This makes up all of our non-qualifying portfolio, and it's a fund that comprises of around 70 holdings, covering both full list stocks, that's mid-cap, small cap, as well as AIM. And we've been invested in this since 2015. I should point out it also includes 10 holdings representing about 8% of the Smaller Companies Fund portfolio size in stocks that we have promoted from the VCT into our Smaller Companies Fund at the point at which we feel the growth story is well proven and the stocks have become more liquid in underlying terms. Third on the ranking here is Learning Technology, which is the provider of services and technology in digital learning and training management. These are products and services used by corporates and also government. The performance of the Smaller Companies Fund and Learning Technologies represents the pressure that the market's been under since the COVID-19 sell-off from really February onwards. Tristel is a manufacturer of infection protection and contamination control products. These are products used in primary healthcare, as you'd expect, have been in significant demand following the outbreak of coronavirus. These products use a proprietary chlorine dioxide chemistry, which is far more amenable to use by hospital staff than more aggressive bleaches and other alcohols. And finally, Keywords, which is an outsourced services provider to the global video games industry. And as you'd expect, that's an area in which the market has become increasingly interested, as the signs are that gaming activity in lockdown has spiked considerably. Moving on to the next slide, we cover the next 5 holdings within the portfolio. And here you see a bit more of the pressure that some stocks have been under in the market sell-off. Ideagen is a specialist software provider in the area of integrated risk management. and that covers compliance and governance monitoring by heavily regulated companies involved in things like pharmaceuticals and also financial services. GB Group is another software specialist in the field of online identity data intelligence. This allows organizations to validate and verify the identities and locations of users, employees, and customers. AB Dynamics is a designer and manufacturer of advanced testing systems and measurement products for the global car market. And you clearly see the impact of concerns about the lockdown effect on global car manufacturing and the potential consequences for long-term global car demand. You can see the impact of that on the share price. Fourth on the list is Pollarding Imaging, which is a developer of enhanced medical imaging technology used to improve MRI scans. It has a major application in lung function imaging. And finally, Craneware, which is another specialist software provider in the area of US hospital billing management. I'll move now on to the geographic makeup of the portfolio, which on the next slide is shown in terms of the revenue mix of the underlying companies we're invested in. There's an expectation that investing in UK smaller companies automatically means a high dependency on UK revenues. But a significant proportion of our portfolio companies have been internationally successful, particularly within our top 10. This is actually a major component of how microcap companies mature into much bigger businesses. It's by having a product or a service which can address multiple markets in multiple geographies. And the companies outgrow their original revenue base as they expand internationally. And we've seen that happen with a variety of our companies, such as Tristel, Keywords, GB Group, and AB Dynamics, that have all been mentioned in the previous slides. In terms of sector makeup, on the next slide, the portfolio, as you can see, has exposure to most of the sectors within AIM. But I would highlight the significant overweights that we have within the portfolio in healthcare and technology versus the AIM benchmark. Companies involved in IT, hardware and software, and also a range of healthcare markets from drug development to medical devices and medical software. These sort of companies play a dominant role in the pipeline of investments for our VCT. Versus international markets, the UK is significantly underrepresented in technology, with the US being the obvious dominant player with the large cap tech stocks that dominate the NASDAQ. It's definitely an attractive aspect of investing in microcap companies through VCTs that you can get greater exposure to these exciting sectors, healthcare and technology. These two sectors are highly likely to play a key role in how the UK emerges after this current crisis. I would also mention in passing that our financials weighting is almost entirely the holding in the the Amati Smaller Companies Fund, rather than investment in underlying financial services companies. Moving on to performance on the next slide. I'll start from the bottom line graph. This is the Numis benchmark for the UK smaller companies universe. It includes the bottom market capitalization of stocks on both the full list and also AIM, and it excludes investment companies. The graph above that is the performance of our UK Smaller Companies Fund, which, as you'll see, has outperformed over the piece since the end of the financial year for the VCT. Above that is the Numis benchmark for the AIM market, the Numis Alternative Markets Benchmark Index, which you'll see has significantly outperformed the broader smaller companies universe. And the very top graph is the performance of our VCT, which I'm pleased to say has outperformed not only the AIM index, but also the wider smaller companies universe. The reason that AIM has outperformed since the crisis emerged reflects the representation within the index of companies which are thought to be survivors not only of the impact of coronavirus, but likely to be beneficiaries and to get a tailwind to their current business. This is in areas such as, I mentioned earlier, healthcare and technology, which, as you've seen earlier, are significant sectors within the AIM market. So I'm pleased to say that we have continued to outperform in both products. I'll now cover some of the holdings which have contributed to that outperformance. The next slide shows our 5 most significant contributors and their weightings within the portfolio and the share price moves since the financial year end. Mentioned earlier, Frontier Development. Frontier issued a strong trading update in late May with revenues and operating profit materially ahead of previous market expectations. Frontier Development currently have 4 games. All are contributing to that growth and that outperformance. But the most recent launch, Planet Zoo, which some of you may be aware of from what your kids play, has been Frontier Development's most successful and biggest PC launch to date. They've also recently signed deals with Formula One to do with Grand Prix racing management, and also Games Workshop, which is the owner of the Warhammer fantasy miniature games. We see both of those new deals as continuing the growth potential within Frontier Development. Keywords raised 100 million in May, about 10% of its issued share capital, to fund future acquisitions. Acquisitions have been a major part of Keywords' growth story over the piece, along with organic growth from integrating those acquisitions. It's anticipating weakness amongst competing smaller service providers. I wanted to have an acquisition war chest to address that. Clearly, Keywords is also benefiting from the positive investor sentiment towards computer gaming, even though it's not a publisher of computer games, merely a service provider. Tristel, as I mentioned earlier, unsurprisingly, is experiencing very strong demand in all its geographic markets. But recently, it's also announced a licensing and collaboration deal with one of our other portfolio companies, Biotrol, and this will allow them to jointly manufacture products which combine their respective technologies and should create much longer lasting, powerful disinfectants, which clearly are going to be in demand in the future. The impact on Biotrol's share price from that deal announcement, as you can see, has been much more significant. That's because Biotrol really was constrained by its manufacturing capacity, whereas Tristel has the capability of driving the combined products forward from a scaling up point of view. But equally, Biotrol in its underlying business prior to the deal is experiencing record sales. And in addition to the Tristel deal, it is also licensing their products, signing other deals with other global partners. And finally, Velocys on this chart. Velocys is a developer of reactor technology which converts waste into aviation fuel and road transport fuel. It announced a further funding from its partners, British Airways and Shell, towards the first commercial plant in the UK. And this will use municipal waste and wood chip as feedstock. And it has exciting potential going forward as well. So a range of very strong performances driving our biggest contributors. As ever, with smaller companies, there are detractors, and the next slide shows the names since the financial year end. AB Dynamics, as you've gathered from the earlier slide, has been the biggest drag on performance. AB Dynamics is fully exposed to the potential ongoing impact of the virus on car manufacturing research budgets. AB Dynamics products are generally used in new car design, new model development, and they're at risk therefore of a cutback in research. Although the companies, the car manufacturing, global car manufacturers are under pressure from an environmental legislation point of view to continue their investment in electric vehicles and assisted driving. So far, AB Dynamics have not indicated they've experienced any material reduction in order intake, but they have seen some large orders deferred, and so the rest of this year will be key as to whether AB Dynamics recovers or suffers ongoing headwinds. Our smaller companies fund is next, and obviously being fully invested in the UK smaller companies universe, it's not immune to the market sell-off. But as we've seen in the previous performance slide, it has continued to outperform its benchmark in the period. Learning Technologies has seen some existing project delays, and new business wins are also likely to be affected, but underpinning almost 3/4 of Learning Tech's business are substantial multi-year recurring revenue streams, and so far those have not been impacted. Quixent is involved in the global gaming market, providing hardware and software to casinos and slot machine manufacturers. Clearly the global gaming market has been largely shut down since the impact of the virus, and this has impacted customer demand and also customer payments. But there are some signs of a re-emergence appearing. For example, in the US, the casinos are beginning to open up, and Quixent is seeing some positive signs of good attendance numbers as that happens. Sosandar is a female fashion online retailer and therefore fully exposed to the headwinds on discretionary consumer spending. Even though it has an online focus, it has experienced a sales slowdown. To finish off with, the next slide shows deal flow activity that we've been involved with over many calendar years. There have been dips in the past. In 2015, the rules regarding qualifying VCT investments were tightened, and that impacted in the following year when you see that deal flow almost halved. That impacted the number of opportunities we were shown, but we sustained our investment activity in terms of the number of deals we participated in. And then in 2019, another dip down in deal opportunities in the light of all the political and economic uncertainties from Brexit and the general election last year. But again, we maintained investment activity in line with previous years. And so it is the case in 2020. We're less than halfway through the year. Deal flow looks sort of in line with last year, albeit it can change very quickly. Deal flow tends to be quite lumpy, and we can get a cluster of deals at any point in time, really. But we've maintained our investment activity in 2020, both in terms of number of deals and on the line below, you see in terms of the amount we have invested. We've maintained that at a pretty steady pace over the last 4 years. Our deal flow activity in 2020 has been a mix. The 8 deals comprise 2 new investments in companies not previously owned. One is Eden Research, which is a developer of crop protection, animal health and consumer products using a naturally occurring plant oil called terpene, and also Synergen, which is a respiratory drug developer. Its technology is used in conditions such as asthma and COPD, and it has recently announced a drug trial for a C19 application. Beyond the 2 new deals, we've done 6 follow-on deals, and overall across that, the mix of sectors that we've been investing in, of the 8, 6 are healthcare companies. 1 is a software company involved in data analytics, and the final one is a solid-state battery manufacturer. Again, reflecting the sort of deal mix that I mentioned earlier, healthcare, technology and software predominantly. That concludes the presentation. Hopefully I've given you a perspective on how the portfolio is currently positioned, the drivers of its recent performance, and how we are maintaining investment activity in what remains a fairly uncertain and difficult market. Thank you.